All right, good morning, traders. Today is, well, it's going to be the last trading day of the month. All right, it is January 30th, 2026. My name is Coach Carignan. I'm the lead instructor here at the BYOB Trading Room. That's the day trading division for the hit and run candlesticks family. Thank you so much for, hey, everybody out there in podcast land, thank you so much for subscribing, following, and liking my content, leaving kind words on my content. Special shout out to John Jordan, Bob Jordan, Kathy, Sarah Roasted for sharing the content, helping get the good word out there to the World Wide Web. Appreciate that. I love it. Thank you. All right, let's take a look at the markets this morning. I think I got an announcement before we get going. Let's take a peek. All right. I just want to let everybody know that Monday, both February 2nd and February 3rd, okay, Rick Sadler, founder of Hit and Run Candlesticks, is going to have a 2-day live trading workshop. All right, so that's Monday and Tuesday from 8:30 to 4. In order to attend this, you have to register. So take your smartphone, scan this little QR code box over here. I'll move my cursor so you can do that. All right, and you scan that, and what happens, you fill out the form, and we'll send you your credentials by email. All right, so if you don't see your credentials in your email, please check your spam folder. Again, Hit and Run Candlesticks is going to offer a 2-day live trading workshop inside the Road to Wealth. All right, so you might want to check that out. Everybody out there in podcast land and digital land, all right? It's an opportunity for some free education, all right? I would not want to miss it. Guarantee he's going to throw out some winning trades. I seriously doubt if he's going to he's going to conduct the whole day and not have some winning trades. All right? So you definitely want to get scheduled for that. Put that on your calendar. Again, scan this with your smartphone, with your camera, smartphone camera. That will open up a little pop out, and then you press that pop out, and then it opens up a page on your browser inside your phone. You press on that, fill it out, and we'll send you your credentials in the email. Thank you so much. All right, let's take a look at the markets. Oh, before we get started. All right, my SPY pivot today, 695.50. Above it, I'm a bull. Below it, I'm a bear. Yesterday, silver and gold made new all-time highs. Diamond Dow made an outside day, closing under a bearish trap under the flat 17. IWM, lower low, lower high, closing under a bearish trap, but over the rising 17. QQQ, SPY made lower lows, lower highs, closing inside bullish traps over their 17 EMA. Stinker made a lower high and a lower low, closing under a bearish trap and under the falling 17. SPY closed with a 2-hour downtrend and a 10-minute uptrend. USO in an uptrend made a higher low and a higher high, closing over a bullish trap over the 17 EMA. UNG, higher high, higher low, closing over a bullish trap over the 17 EMA. US dollar index still in a daily downtrend, closed near the 96.18 area. SPY max pain for today, 690 with a put to call ratio of 3.3 puts for each call that expires today at 4:15. Okay, remember, index options expire at 4:15. Security options expire at 4. If this is your first time seeing this, everything under the bulls column is in a daily uptrend over the 17 EMA. Everything under the bears columns, all right, are in daily downtrends under the 17 EMA. If you see a star over here, there are none. All right, what you'll have is a bull flag being constructed. I call it a launch pad from which to launch higher. If you see a star over here, what you got is a bear flag being constructed, and I call it a platform from which to dive lower. All right, so we'll see what happens this morning. All right, let's take a look at the market, see what happened overnight, see what happened yesterday, make some comparisons, and see what we can do to extrapolate some profits. All right. I'm going to move this out of the way. Okay, right there. Going to move that clear over here. We're going to take the trading off. All right. And we're going to pull up that. And we're going to squeeze this down. All right. So we have consolidation over, don't need all that, over prior consolidation here, okay? So I'm going to box it off. So you got some consolidation here, okay? And then we have consolidation over prior consolidation. So I'm bullish. Bullish again this morning, okay? Yesterday, we had a harsh pullback. All right, harsh pullback yesterday, and then a nice rally to the upside. I got the wrong chart, so let's go ahead and pull up SPY. All right, so what do we have? We have, it's something different. Okay, so we got kind of a head and shoulders pattern printing up here. This would be right here would be the head. Okay, right here is going to be the right shoulder, and then right here is going to be the left shoulder. So we got a bearish head and shoulders pattern. Looking at it right now with a neckline running right through, right through here. Got a neckline. So below that neckline, break that, and probably going to be checking out those lows down here. All right, so there's SPY. So let's take a look at the 10-minute. All right, and on the 10-minute, see we left off with a 10-minute uptrend. You got the sticks and the 3 riding up over the 8. All right, so, and all of it riding up over VWAP. All right, so we had 10-minute uptrend over VWAP coming into the close yesterday. Currently, we have a 10-minute uptrend. Okay, my plan this morning is to continue trading the 10-minute uptrend. When is the 10-minute uptrend broken? Okay, the 10-minute uptrend is broken for me. This is me, okay, when the bearish 10-minute rubber band candle is breached. In other words, we close a candle below the bearish rubber band candle, okay? Until then, I'm going to remain bullish, all right? Even through all of this, I remain bullish. See the comeback we had, all right? Remember the day before that, we had bearish all under here, found the bottom, and then we had a 10-minute uptrend back up, okay? So I am bullish, still bullish, all right? Believe it or not, still bullish. Even with us dipping down here, we made a higher low. I'm looking for the bulls to be inspired by the failure to make a lower low and turn around and make a higher high. That's what I'm looking for, all right? We'll find out what happens. So it's the 10-minute uptrend. I'm interested in trading to the upside. 10-minute uptrend is broken when the bearish 10-minute rubber band candle is breached. In other words, a candle closes below that 10-minute bearish rubber band candle. Until then, I will remain bullish, all right? Please trade accordingly, all right? Do not get too big too soon where you can't handle something like this, okay? Or better yet, don't even trade this. Just wait for the 10-minute uptrend to manifest, and then trade the 10-minute uptrend when it occurs, okay? So there's SPY. Currently, we're in a 10-minute uptrend. All right, so there's the 10-minute. 10-minute uptrend into the close. Let's take a look at the 2-hour. And right here's the 2-hour. And in the 2-hour, we have, I'm going to pick up a different chart. And I'm going to go to the 2-hour. So this is the 2-hour on the SPY. We have a 2-hour downtrend coming into the close. See the sticks and the 3 are below the 8. So 2-hour downtrend coming into the close. On the daily chart, okay, right here on the daily chart, you can see we made a lower high, lower low. We closed inside a bullish trap over the flat 17. Still up here at the top of quadrant 4. All right, so I'm bullish, and we're still in an uptrend. Here's our April low. So I'm still bullish, and price is still in an uptrend on the daily chart. Okay, we haven't made any lower lows yet. Okay, we did here, but we turned around and we made a higher high. Okay, I want to see some follow through after breaching that higher high. We'll see. You can see yesterday the bulls bought that right back up there. All right, so we'll find out what's going to happen soon. All right, so there's the daily chart. It's the end of the month. Who knows where they want to stick it at the end of the month? Maybe a big rally today. Not sure. We'll find out. Okay, so on the daily chart, we're bullish and in an uptrend. On the weekly chart, see all the green dots? Still bullish and in an uptrend. Here's our April low. There's our all-time high. Still bullish and in an uptrend. Monthly chart, multiple green dots. We're bullish and in an uptrend on the monthly chart. Okay, so you already have the plan. I said I'm going to trade the continuation of the 10-minute uptrend to the upside. Okay, you got the sticks and the 3 riding up over the 8. Okay, over VWAP. So I'm interested in trading a continuation of the 10-minute uptrend from this morning and from what left off yesterday. We'll see what happens. Okay, that's my interest for this morning. That's my plan. I'm going to trade it up to gap fill right up here. Hoping to trade it right up to gap fill. I'd like to see price get on top of gap fill, consolidate over it. All right, if that happens, I'll be interested in trading the next breakout to the upside. In other words, 1 would be a nice move up to the gap fill. 2 would be to consolidate over it, and then I'd look for another breakout to the upside. Okay, so there's SPY on the 10. Let's take a look at the game plan. Okay, game plan for this morning. Okay, get SPY, move this up here, put that there, and let's move this over slightly. Okay, so green erases red over 694.80. That is a green erases red entry up over those highs that we made yesterday. Okay, the late day high, not the early morning high, the late day high. Okay, SPY pivot 691. Above it I'm a bull, below it I'm a bear. Red erases green entry, price below 684.80. Okay, I trade 7 DTE and 14 DTE Friday options on the multiple of 5. All right, specifically for the open interest. I like a lot of open interest. That usually equates to a lot of liquidity, or more liquidity than other strikes or other option days, other options on from other days. Okay, that usually equates to, like I said, a lot of liquidity, meaning a tight bid-ask spread. I don't like it when price there's more than 1 penny or 2 pennies between the bid and the ask. All right, I like a nice tight bid-ask spread that provides less slippage and easy to get in, easy to get out. Okay, I like strikes $2 to $15 out of the money, specifically for the risk. Okay, I only have a certain amount of risk that I can use today. I think it's only 18,000. So for that reason, I choose the out of the money options. All right, so I like the out of the money because I'm just gonna say, okay, if you've got 10, let's say you've got 10 contracts and you're long right here, and then you go through this, okay, that's from 697 down to 685. That is a $12 drop. Okay, so in a matter of an hour and a half, your account, if you have 10 and you've got in the money contracts, your account's going to go down probably close to $12,000. just like that, because you've got in the money contracts, and therefore they will just flood all the way down. It's a $12 move from here down to here. Okay, in the money contracts usually trade penny for penny. So if you start at 697 and you head down to 685, that's a $12 drop right there. 10 contracts, all right? It's going to take you all the way down to $12,000 dip in your account. Okay, for that reason, I don't like that. So I trade the out of the money contracts because they offer less risk. Okay, I trade 10-minute uptrends over VWAP. I trade 10-minute downtrends under VWAP. If a 10-minute uptrend were to manifest, I don't know, down here, okay, or over here, long before it gets to the green erases red entry, I'm not opposed to trading it. I just like to see it break the bullish 10-minute rubber band candle. If a 10-minute downtrend were to manifest up here, or over here, okay, I'd like to trade it. I just like to see it break the bearish 10-minute rubber band candle. Okay, so there's my SPY game plan. Let's take a look at QQQ. They got a game plan as well. And let's go to a different one. Okay, on the 15, squeeze this over. Here we go. All right, QQQ game plan. All right. Pivot, 625.40. Above it, I'm a bull. Below it, I'm a bear. Green erases red, over 630. Red erases green, underneath, 618.25. Okay, it's the same thing as SPY. I trade 7 days and 14 days till expiration Friday options on the multiple of 5, specifically for the open interest, all right? The tight bid-ask spread, all right? I like the strikes $2 to $15 out of the money. Again, less risk for me, all right? Trade 10-minute uptrends over VWAP, 10-minute downtrends under VWAP. Let's take a look at the 10-minute chart. Pick up a clean one. On the 10-minute chart, you can see we've got the sticks and the 3 riding up over the 8. That's the white line. So that's a 10-minute uptrend coming into the close, just like SPY, okay? QQQ, 10-minute uptrend coming into the close on QQQ. 2-hour chart. You can see clearly you got the sticks and the 3. The 3 is that yellow line, okay? And you got an opening right down here where the 3 is below the 8. So we got a 2-hour downtrend coming into the close as of yesterday on the daily chart. Okay, we've got a lower high and a lower low as compared to the day before. Closed inside a bullish trap over the flat 17 EMA. Okay, I'll back out and over the all-time high anchored VWAP. You can see we're at the top of quadrant 4. All right, here's our April low. So that's bullish and in an uptrend for QQQ. All right, let's take a look at IWM. IWM puts in a lower high, lower low, closing underneath the bearish trap, but over the rising 17. Still at the top of quadrant 4. Here's our April low. That's bullish and in an uptrend right there. Nothing's broken yet. Let's take a look at Diamond Dow. Diamond Dow put in an outside day. It's a higher high and a lower low. We closed under a bearish trap and under the 17 EMA. It's a flat 17. Okay, clearly at the top of quadrant 4. Here's our April low. That's bullish and still in an uptrend for Diamond Dow up there. Let's take a look at Stinker. All right, Stinker put in a lower high and a lower low, closing under a bullish trap and under the falling 17 EMA and under the all-time high anchored VWAP and under the bullish zone right here. So it's in the neutral zone and still in a downtrend. They haven't popped a new high. They have to see this high right here, a little wick that goes up through the 17. They got to get higher than that. So Still in a downtrend. All right. And still neutral down here on stinker. All right. It's got like a head and shoulders. See the head right there? Left shoulder, right shoulder. Okay. So there's FNGU. All right. Let's take a look at silver and gold. Silver, new all-time high. Drop the mic. Doesn't get any better than that. Be careful on silver. Like I said, this candle right here looks like a big middle finger. All right, so you're getting a big dip today. Big dip. Big dip. All right, on silver on the daily chart. Okay, that looks like a top to me. All right, we'll see what happens, but that looks like a top. All right, so there's silver. All right, on the daily chart. Again, new all-time high. So that's bullish. All right. And still in an uptrend. I don't know what it's going to look like today because they got all the way down to 86.50 area right down here. Okay, so there's silver. Let's take a look at gold. Gold taking a walloping too. Gold, new all-time high made yesterday. That's bullish, still in an uptrend on gold. It looks like a top to me also on gold. All right, so there's gold and silver, new all-time highs. Okay, silver's bullish, but I'm just going to tell you, be careful. All right, if you want to go bullish on that. Same with gold. All right, be careful. All right, they're both up there in bullish, and they're both in uptrends. But based on the candle structure that I'm looking at, I'm just going to say be careful trading that, okay, because they both look like tops. All right, so there's gold and silver. Let's take a look at USO. USO, surprise yesterday. Got a higher low and a higher high closing. Check this out. All the way up here in the upper third, so that's bullish up here. Higher low, higher high. Here's quadrant 1, 2, 3. They're up in quadrant 4. So that's bullish and in an uptrend. Higher low, higher high. Closing over the bullish trap. Over the rising 17. Over the 4-year high anchored VWAP. Okay, so our post-COVID high right there. And we're over that. Okay, what you want to look for is for price structure to hold in the upper third. Okay, so right there, 70, 75, 66. You want it to remain above 75, 66. Actually, maybe a little bit lower there. Okay, 75, 40. Okay, 75, 40. All right, you want it to remain in the upper third. You want to see it hold the higher ground. Okay. It's shown us, it has observing past, recent past, unable to hold the higher ground. See, 3-4 days, and then they give it up. 2 days, they give it up. 1 day, they give it up. Okay, 1 day, they give it up. Okay, so we want to see it hold the higher ground. Okay, so USO, daily chart, bullish and in an uptrend. Let's take a look at UNG. Look at this, holding the higher ground. Okay, UNG, higher low, higher high, closing over bullish trap, over the rising 17 EMA, over this 12-month high anchored VWAP, which is not a very high bar to set, considering the all-time high, okay, is like 8,000. Okay, just want to give you a reality check here. Okay, that's not a very high bar that we set. Okay, 12-month high right there, closing over that 12-month high. And that 12-month high, it's not 8,000, it's only $24. Okay, so just showing. Okay, just saying. Okay, so there's UNG holding the higher ground. So they're no longer in the lower third. So they're neutral and in an uptrend right now. And they're showing signs of strength by holding this higher ground up here in the neutral zone. So there's UNGs. Take a look at our technicals. T2101. Okay, so the market dipped yesterday and participation kind of increased, right, from the day before. Okay, not really a good sign. Okay, not at all. Okay, I'd rather see it decrease, but participation increased yesterday. The good news was there's a big rally back at the end of the day. Well, actually, in the afternoon hours. All right, so and during that, participation decreased. So this is not what I want to see. All right, is participation increasing? All right, as we dip lower, and decreasing as we rally back to the highs. Okay, so not liking this at all. Okay, not much. It's like Sam I am. All right, T2101, T2122. Okay, we find ourselves camping in the seller's chop zone. Again, not where I want to be. Closing the day in the buyer's chop zone, but really camping out in the seller's chop zone almost all day. Okay, you can still see we're probably under this downtrend line right through here. Okay, so not liking that. We're caught underneath that downtrend line. Seems like it's invisible, but it seems like every time we get near it, all right, it seems to get whacked down. Let's see if I can draw one in. Oh, I can. Check this out. Okay, so there's our what was once invisible downtrend line. See how we get near it and we get smacked down. It's like whack-a-mole. Okay, get near it, get whacked down, make a lower low. See the lower low from this one. Got a low here. Get whacked down. Got to make a lower low. Okay, so not liking this at all. T2122. All right, I don't like this trend that I'm looking at. Okay, I want to break this trend. Okay, so we'll see what happens with that. Okay, currently not liking the trend that I see. All right, so let's take that off. Let's go take a look at T2123. All right, so T2123. This is the all-time high. Okay, that was made not yesterday, but the day before. Okay, this was Thursday. It's Wednesday. T2123 makes the all-time high. Okay, so we failed to make a higher high yesterday. And you can see price action, all right? We got a low, we made a lower low, but then we turned around, okay? And then we got a high here. We made a higher high. So at the very end of the day, we left off with a 15-minute uptrend on T2123. Now, if we look at this from a little bigger perspective, we got to move up and clearly a hold of the higher ground. That's bullish. All right, up over the 200 SMA. Yeah, that's exactly where I want to be if I'm bullish. T2123. Let's take a look at the 3-bar chart. Same product. Okay, you can see here's our April low. We make a new all-time high because this right here was our old all-time high. We make a new all-time high. We pull back to the neckline of this head and shoulders pattern. And then with a red rubber school ball, we bounce, wind up crossing up through the flat 200 and consolidating over it. This is what I like to see. Like today, I want to see us get on top of the gap fill line, yesterday's close, all right, and consolidate over it, all right? I want to see the same thing happen today that happened here. See, price cuts up through the flat 200, consolidates over it, and then they dig out a measured move to make a new all-time high up here. So that was our old all-time high, okay? And this is our new all-time high. You can see clearly price moves up and holds the higher ground. That's bullish. Okay, if I zoom way out, here's our April low. There's our all-time high. We're at the top of quadrant 4. That's bullish. And then an uptrend right there. Let's take a look at Stinker. All right, Stinker had a really wild day yesterday. Okay, you can see big dip down. All right. If there was a bullish gap in here somewhere, it got filled. I'm just saying. All right, so Stinker on the 15-minute chart winds up actually closing at the end of the day above the 200 SMA. So nice recovery for Stinker. All right, but at the end of the day, let's see what we got. But we're still, here's a low, there's a low. We're still in a downtrend. Okay, no uptrend yet to report on the 15-minute chart. Okay, if they take out this high, they'll have an uptrend. Okay, but right here, see, you got a low right there. There's a high, there's a low. Then we make another lower high. Yeah, well, we made a lower low, so now we're in a downtrend on Stinker. Okay, the good news is they closed over the falling or the flat 200 SMA. All right, that's a bullish right there. If they could hold over this, that would be just beautiful, just peachy, all right? But I'm not getting that, all right? I'm getting consolidation under some prior consolidation, almost like a little mini head and shoulders setting up again here. So you got a head here, left shoulder, right shoulder. Well, we're getting the same thing again. Little head up here, left shoulder, right shoulder setting up against. This is FNGU on the 15-minute chart. So I prefer to be up over here. I don't like the idea of gapping down. I hope the bulls have enough energy in them or enough mojo, spinach, mustard, whatever it takes to give us a gap fill and hopefully decapitate the head on this bearish head and shoulders pattern. All right, that's what I'm looking for on FNGU. All right, that's the 15-minute chart. Even though we rallied back, we're still in a downtrend because we still failed to make a higher high. Okay, so there's Stinker for us. All right, let's take a look at U.S. dollar index. Back way out, and we'll look at this on the daily chart. Okay, so you can see this is 2025 right here. So you can see the downtrend from 2025. So that's the high for 2025. Okay, you can see at the top of this, above this line, all of this was major support. We broke through major support and we're consolidating under all of these. This is like 2 years of built up major support. See how the valleys all stop at the same spot and they all bounce up there. So this was major support. Okay, we broke major support. Now becomes minor resistance because we're underneath it. Okay, so what we got here is a bear flag, a move down and then over to the right. So this is a dive platform from which to dive lower. Okay, it's a bear flag. Okay, so we'll see what happens. Notice we're caught underneath the 200 SMA right there. See that? 200 SMA. All right, and price action closed 96.18. All right, right around here, 96. Yeah, about 96.18 right there. And is in a downtrend, okay? Because we got a low here and a low here. Well, we made a lower low. Okay, so got price in a downtrend, okay? So there's the U.S. dollar index. Let's take a look at our economic package and SPY/MEX pain for today. Let me refresh this just to make sure. They like to move it around sometimes. SPY/MEX pain is 690. Put to call ratio is 3.1 put for each call that expires. SPY call that expires today. Okay, so way more puts than we have calls. All right, so there could be a put squeeze. All right, again, max pain for the dealers is 690. All right, so we'll see what happens with price action regarding that. So if there is a put squeeze, it has to occur right out of the gate. All right. If they give the puts opportunity, all right, to sell the peak and buy the dip and get out at break even, all right, it really negates the energy wrapped up inside of a put squeeze, okay? In other words, they have to come out of the gate and just keep rising higher with a 10-minute uptrend, okay? If they give them any room at all right, to double down up here and then get out at break even, all right, it will take the energy out of the put squeeze, all right? Just showing you how that works. They have to come out of the gate and rally higher immediately, and then the puts have to cover, and what causes that, then you get a double dose of energy to the upside, all right? So keep an eye on that, all right? They have to put the pressure on right away and keep it going. Okay, so there's the put squeeze on the table. On the economic calendar, today, we got PPI final demand. Okay, it's not a delayed report. 8:30 this morning. Chicago PMI 945. Another one that's not delayed. A lot of delayed reports this week, but not today. Okay, got a Baker Hughes rig count at 1. Oh, they added that. All right, look at that. Farm prices at 3 p.m. They must be listening to me. Okay? Yeah, I wish. All right, so that's all. So really light week, really light day as far as economic news right there. The main event this week was the FOMC announcement, and they're not going to touch the rates for right now. Okay, so of course the market didn't really care for that. All right, so they wanted a rate cut. They didn't get it. Oh, by the way, the headliner news that came out today was POTUS picked a new federal chairman. So I guess he's not real fond of the other guy, okay, Powell. All right, so we'll see what happens. Supposedly, he's not as hawkish as Powell. All right, he's a little bit more dovish, according to reports. I don't know for exact. All right, but according to, he's a Fed governor, and he has a history of voting. All right, so according to news reports, okay, he's more dovish than Federal Chairman Powell. Okay, so the market could rally on that news alone. Okay, so he nominated a new guy for the federal chair. So we'll see what happens with that. I don't know if he's the one that picks the federal chairman or not, or appoints him. I'm not sure if he's the guy or if it's done by Congress, or if they got a 2-year tenure and then they change. I'm not sure how that is done at all. But anyways, got a new guy that got nominated by POTUS. He's nominated last week. So it's kind of old news, but they're just now releasing it today. That headline could be the catalyst that drives price higher. We'll see, all right? We'll see what happens. Earnings report. Okay, so this week we had some really big earnings. I'm just going to go back to revisit them, all right? Microsoft, which is about $3.5 trillion reported. Meta Platforms, which is about my eyes aren't that great, $1.8 trillion they reported. Tesla, $1.4 trillion they reported. ASML, $500 billion. And then Lam Research, $1/3 billion right there. Same with IBM. So big time market cap has reported right there. We haven't got Google yet. I think that's coming. Maybe this week coming up. We'll see. All right. Then yesterday we had Apple report I'm just going to call it $3.8 trillion. Okay, because it's 3.796. So I'm just going to call it $3.8 trillion. Then you got Visa, 2/3 trillion there. MasterCard, almost $500 billion on MasterCard. Caterpillar, about 1/3 trillion right there. SAP, Thermo Fisher, pretty close, about 1/4 trillion. Okay, Clack, about 1/5 trillion right there. Honeywell. Okay, so a lot of market cap reported this week. All right. And we're not falling out of bed. All right. So we'll see what happens here. Right. I noticed the bulls bought the dip yesterday. All right. So we'll see what happens this morning. Okay. So that's on the earnings calendar. So what happens today? Who's reporting? We got ExxonMobil's going to report. Looks like $580 billion. Chevron Corporation, more energy, $342 billion. American Express, $245 billion. Verizon Communications, I can barely see it, $166 billion. Regeneron, $76 billion. Some more familiar names, but nothing here that's going to be market moving. Actually, none of this will probably be market moving. Not like the things that really move the market are the big tech, all right? Big tech like the Apple, Meta, the Google, all right? Anything in the Mag 7 or in the FNGU, okay? Lam Research is another big tech, all right? I didn't know that, but I found out today. Lam Research, another big tech right there, okay? So, and as well as anything in the SMH, most anything in the SMH category, all right, that would be the semiconductors, can be a market mover, all right, because it's the future is microchips and well, just chips that help power the thought process and production right there. Okay, so again today got some energy reporting, got some financial reporting, communication, and then we got some looks like the drug sector right there. Okay, so that's it for this morning right here. I will see everybody in the room here. I will be back in about 35 minutes and we'll open up the markets. Thank you, everybody. Have a wonderful, have a profitable day. Okay, I'm going to just say that. Have a profitable day. Be on your P's and Q's. All right, pay attention. Watch that price action. Make sure you look at those price candles, okay? So you can see if we got that 10-minute uptrend continues. All right, I'll see everybody here in the room in about 35 minutes. We'll open up the market. Thank you.